Hello traders, Gary Wagner here, approximately 11 a.m. in Honolulu. It is Thursday, the 26th day of July, 2012, and this is the Daily Report for Gold and Silver. Off the heels of a nice showing yesterday, we've got very good follow through today with the precious metals trading higher across the board. Currently, we're up about $11.50, 0.72% gain on the day in gold. Low, I like this, 1601, not resistance, but the low, support. High, 1623, current, 1617, 1616, bid-ask spread. Cash market, we're looking right now, current screen, at around 1615. Silver, also a nice showing. It is up about 0.77, about 0.75%, up about 21 cents on the day. You can see cash market current print on the screen, 27.47. It has had a high of 27.94 and a low of 27.16. Let's start off the show this morning looking at a very short-term chart. This, of course, is a 2-hour Henkin Ashi chart. It is the continuous contract of COMEX Gold. What I see that's interesting when we take a look at it, we have the MACD, of course, overlaid on the bottom. But as you can see, this market was trading real sideways. This is right around 1575, right in that area. You can see the sideways action. We had very good support right around 1560. As this market takes off, it begins to build steam fairly slowly. And what I mean by that is if we look at the size of the bodies on these Henkin Ashi, you can see that they're fairly small. They have tails. There's really nothing real defined. But that's not going to last very long, because what happens is as this rally begins to accelerate, you can really see how the body size increases, it loses the bottoms of the tails, and is able to genuinely, for the first time in a while, start to trade back over $16. This is 1605 right in here. And so as it reaches that pivotal point, we've seen it back down on so many occasions. But in this case, what it literally did was consolidate. You can see that area right in here for a little while before moving back off to the upside, and is now trading well into the 16 teens, meaning 1610 and above. Currently, as I said, current print's right around 1615, but you can see there's not really a defined trend just yet. Nothing like we're seeing here where you get a succession of absence of tails and large-bodied candles, one following the other, because right now when we look at the short-term charts, you can see again, it looks like it's forming that base. And if the market's going to continue to go higher, and I really think that as long as we hold above 1600, we're really going to be shooting for about 1630, 1635. It really doesn't have anywhere to go. It can either go back and test 1600, see if that's going to maintain support. This is all on a technical basis, of course, or it can go and fight for that next resistance level around 1630. But you can see it breaks 1600. It consolidates for a little while. It then moves up to 1620. Here's our high around 1623. And now we're getting a little bit of sideways movement. Nothing to be concerned with in terms of whether the rally is going to end, but we haven't really picked up the kind of steam that we saw at the beginning of this rally. Now really all I've done, and we'll go to some longer term charts in just a second, but all I've really done here is compressed the timetable, so to speak, on this chart. And the reason for doing that is I want to take a look at where our tops are. This is that 1535 right in here. This top, though, right now seems to be where the market is trending at. This is 14. This top is somewhere right around 1620. The high today being 23. So you can see that it might be looking to see if there's any resistance at this top. But when we consider where the next levels are, as I said, 1635 to 1640. And then the next target after that, of course, would be about the 1670 mark. But we first got to really break through this point. And I can tell you this, if we do in fact start trading above 1630, 1635, traders, I think it's a different ballgame, and we've got a really strong technical chance at seeing this market begin to run strong to the upside again. Traders, I want to move onward to our daily chart cash market, and this is where we have been plotting not only Elliott wave, but we've been plotting Fibonacci retracement, and most importantly, we've been talking about over the last couple of weeks this compression triangle, this type of a corrective action that is that wedge action. And typically, you could have easily seen the market break to the downside. It really flirted with the support area on so many occasions. But if you recall, we were talking about the fact that it at least was my belief that 1681 was a fairly critical point. It was a jump-starting point. And to me, it was really important to maintain some closes above that. And as you can see, when you take a look at this market right now and you look at really where it's currently trading, you can see how much power it had as it came off of that support line. Now, where do we think this market could head? Well, quite obviously, there's a couple of different ways we can play this out. Let's look at this resistance area right in here. If, in fact, we get a true Elliott wave count, this might only be leg 4, meaning we have the top here, we have leg 1, leg 2, a very, very long 3. This would be 4. You would get a 5th leg back down, and then you would get your thrust. The thrust, of course, would take you to new highs because that would end the correction. That would end this major corrective wave 4. Wave 3 took us to a record top at 1920. Well, wave 5 would do the same thing. Wave 5, unless it's a truncated or a failed 5th wave, as they call it, would have to reach new highs. It's the nature of the counting method in Elliott wave. We're still within the count. One other possibility, though. The other possibility is that we continue to maintain support in this level. We have a compression triangle right here, and as the market comes up, we have enough power to break right through. We would then get our thrust on the 5th wave. Yes, on the 5th wave, rather than it coming 5th wave down and then up. So it would be quite interesting indeed. Excuse me, the 4th wave. But in any case, I think that we are in for a really exciting point of time within the gold market. We've got our long position, so we're sitting real good. We're probably going to want to add to that position at this point also. Traders, the last chart that I want to take a look at today, this is a weekly chart in the cash market of gold. It's been blown up so that we can look at a longer term cycle within the market. But what you can see is this. This goes back to the beginning. This is the big run itself back in 2008. This is in terms of count A, B, and C. So this is the conclusion of the correction. And you can see, and the reason for pointing this out, I want you to kind of look at the timeline of this correction as we compare it to this correction. We're not convinced it's over, but we're starting to get technical evidence. You can see it's quite a bit longer. There's no doubt about that. At the same time, when we take a look at the actual count itself, and the count can go a couple of ways, but really what I'm looking at is this being our 3rd wave right in here. We really have, in terms of a longer picture, we've got a good period of time. If we just look at the timetable that it took, the amount of time that this rally transpired over a couple of years, in the same way, once we weather this particular correction, it is still my belief that we will go into a last impulse wave on a major count, and that major count will take us to new highs in the market. So traders, what types of observations can we make about current state of affairs with silver? Looking at a longer term chart, it's a daily chart, but it's plotting this last huge rally, also has a Fibonacci retracement on it. The first thing that's quite clear to me is that we did in fact correctly identify this very, very strong level of support, this triple bottom that took place within silver when we consider these lows here, and then the fact that it matched that series of lows right there. The other thing that we can see is that the marketplace itself is really beginning to propel itself to the upside. On a daily chart, my sentiment right now is that there's only a couple of major points we can really look at for first levels of resistance. The first point is going to be right here, and this is at just under $30. You can see it. It's based upon this top, and of course 3060, that's the 61% retracement level. That ends us up right in this area. In terms of historical data points that give us a little bit of history behind it, that give us some indication that that is a price point within the market that at least on a technical basis has some significance. Well, we can see it in a few areas. We see it in this top right in here. Market comes up. You can see that as it comes down, this is that secondary top, the secondary bottom right down here. It comes up and you can see that it kind of rests along this area. It then becomes support. Market takes off, moves up to the next level. And then once again, this area right in here becomes supportive until it breaks through and then breaks to the next level. Really nothing in this area and nothing in this area are indicative, historically speaking, of any kind of technical evidence. But I will say that aside from our one little area right below 30 and then 3060, there really doesn't seem to be, on a technical basis, any real significant resistance areas. We can talk about all the fundamentals that we want, but right now we're going to base our trade on technically driven indicators, looking for support and resistance, because what I believe is that if the market has the momentum, it should have the momentum both in gold and silver to take us to these levels that we talked about. That would be a good point to look to pull some profits, let the market pull back, and then re-enter the market as it continues along this rally. Because the one thing, especially in gold, if in fact this market is able to start trading over that 1635 area, traders, I think that we can identify the correction as being over. And once we have that type of technical evidence, we might in fact go into a tremendous impulse wave and a tremendous rally. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up on Friday. Have a great day. Bye-bye.